back, traders. This is Pips Empire, and today we'll be talking about concept of take profit and stop loss. Previously in our lesson 6, we talked about forms of trading orders, and take profit and stop loss is another form of trading orders that we are going to look at today. So make sure you watch till the end of this video to learn how to use your take profit order and stop loss order. Take profit and stop loss are other forms of market orders, but in a different category of its own. Okay, I said this already. And then let's look at take profit. Take profit is a market order that instructs your broker to close your trade for you when it reaches a particular number of pips in your favor. Remember, in your favor. That's when you're done with your analysis. Maybe you analyzed, let's say Euro USD, that it will go from 1.00000 to 1.002. So when you place your buy and then the market goes from 1.000 to 1.002, then your trade closes automatically because you placed a take profit order at that particular price. So that's what take profit order means. So this form of order executes itself automatically whether the trader is online or offline. So you don't need to stick to your chart every hour or every minute for you to monitor your trade. You can go ahead and place your trade, place your take profit, and go offline and do other stuff that you want to do. And whenever market gets to your zone, is to close your order automatically. So that's just the concept here. Then the next one is stop loss. Stop loss is a form of market order that instructs your broker to close your trade when the market is going against you. Remember that this one is when the market is going in your favor, but here is when it's going against you, just like the name implies, stop loss. You are telling the broker to stop my loss when the market condition is bad. When price comes to this particular price, just close my trade and I will accept the loss I already incurred. This order is also triggered when offline or online, just like the other one, take profit. So I'll use a chart to explain this so it will give you a better understanding. So here I have a bullish trend, and I'll be using trend line strategy here to explain this because it's easier and clearer. So I am done with my analysis, and this is my trend line. And then normally, if you are a trend line trader, you know that you normally buy or sell at the third touch of the trend line. Already market has touched here, this zone, and touched here, and this is the third touch. So after market has formed this high, then coming to form this low here, or you call it higher low, you place your order. You can use pending orders like I explained in the previous videos. If you've not watched the previous video on pending orders, you can go ahead and do that after this one. So you can use a pending order, or you wait for instant market execution when the price comes here. So you can place your trade here. So since I'm interested in buying in this zone, I am buying at 260. That's the current price of this market. Let's name this market XYZ. So I'm trading XYZ here. So I'm just using this to illustrate what I explained earlier here. So I'm interested in buying this particular XYZ at 260, and then I want to take my profit at the previous high, which is this high here. So I will check the price, which is a 420. So since the price here is 420, I will place my take profit at 420, and then place my stop loss at the previous low, which is 200, and then my order is fit to run. I can go offline, I can engage in other things I have, I can do any other thing I wish to do, and stay away from the chart so that the trade will run to my profit. So but sometimes if the trade doesn't go well, it can come down to your stop loss and then take you out. But you see that you are risking smaller percentage of your account and trying to win a bigger amount. So imagine buying at 260, and then you're taking profit at 420. But if it goes against you, you are losing just about 60 points or dollars or whatever way you're calculating it. So you see that what you are risking is way smaller than what you are expecting as the reward. So I'll use another scenario, a bearish trend, where I'll still explain what I explained here, so that whichever market you approach, you'll be able to handle it. Okay, just the same pattern I used, trend line. Then after drawing my trend line, I want to sell at this zone, which is I think the fifth touch of the trend line. I can take the price, which is 360, place my TP at the previous low, which is around 280 or so, then place my stop loss at the previous high, which is 400, and then that's all. And then I will allow my trade to run to take profit. So like I said already, you mustn't be online for this to happen. You can just place your order and go your way. Whenever market comes to any of these prices, it will activate it. If you stop loss, fine. If you take profit, perfect. So remember, here I'm selling, so I'm selling at 360 and I'm placing my stop loss at 400 at a higher price now. Then my take profits at a lower price, which is 280. But in the other scenario, it was the other way around. I buy, I place my take profit at a higher price, then my stop loss at a lower price. So that's just the concept here. I'll also do a video to show you how to do all these things in MT4 using normal chat. So thank you for watching this video. Like the video if it's actually helpful to you. Share to your friends and subscribe to our channel if this is your first time. So see you in the next class.